honestly, the markets today. I mean, I was really worrying about coming onto stream this afternoon because I just don't know what to talk about. The pound came out with an interest rate decision. Lo and behold, 5% stable. So there's nothing really to talk about there, but there is a massive elephant in the room. The Fed cut US interest rates by 0.5%. 50 basis point chop off the block. I couldn't believe it. Well, no one could believe it. I mean, it was a really big surprise, you know. It doesn't come as a surprise if you think about the data. Just in terms of how quickly the economy is cooling off now, we're really seeing the easing begin. Obviously, they don't want to keep interest rates at a high level if the economy is cooling off so quickly, because that, ladies and gentlemen, ladies who are eventually going to watch this stream, is the recipe for a deep recession. And obviously, the Fed are doing everything they can to avoid that. But a 50 basis point cut, I mean, yeah, really, really big news. What's most surprising about this, and I did have a little chinwag in the lounge about this morning, is the really surprising thing is the dollar's not done anything. And so this is the FOMC event last night. We had a dip down, we had a bit of a run down, a little bit of a rally back, and we've just remained stable. The market didn't move a muscle. So this is our floor. We had this fake out. We had the little bit of a bounce back. It is starting to sort of rally back at the moment, but a 50 basis point cut based on recession fears. Why is the US dollar rallying right now? I mean, it makes no sense whatsoever. Even more interestingly than that is actually, to be fair, the US stock market has actually started to rally back now. So that's what it should do. This isn't actually a surprise at all. This is what it should do. But when I was watching the FOMC, I wasn't trading it, of course, but I did have the charts open. I was listening in. And this is the impact. This is the market impact from an event like that with a 50 basis point surprise from the Fed. I mean, this is all really odd and extremely surprising. This is what I would have expected, which, you know, thank you, markets, for actually doing what you're supposed to. This is very, very, this is very surprising. This whole period here. And we saw that. I mean, you know, we didn't start to see the continuation north for the stocks until about 2 o'clock in the morning, 2:30 in the morning. So there is a lot of manipulation, and that's what I'm coming to here. There is a lot of institutional manipulation going on in these markets at the moment. I really do feel, not coming from a conspiracy theory perspective, but coming from the perspective of someone who's obviously been in this game for a really long time, there is something coming. I don't know what that is, you know, but there is something coming. I think the major firms, the big hedge funds, and the big banks are in a panic mode. Is that the major financial recession? The fear of it, more precisely, because we're not actually in the recession yet, but the fear of a major recession, you know, 2008 style recession, that's on the horizon. Is that something they're looking at now? I think it was back in, I know we are really going back now, but I do appreciate some of you guys were actually with me in following along back then. But back several years, we had multiple discussions throughout the years of the coronavirus, 2020, 2021, even part of 2022, that we were talking by 24, 25. And I really hope some of you in this room remember, because I said that my forecast for the major recession was in 24, 25. That was my call. And I know it's easy for online trading gurus to make calls because they know that they're never going to be remembered, sort of thing, so that you can just say whatever, you know. But I just swear to God, that was my call. 24, 25 is when, yeah, thank you, James. Yeah, exactly. When we were going to start to see some real trouble, all off the back of the stimulus that the banks were dishing out, the governments were dishing out for individuals from COVID, that this would come back to bite us on the arse. It was just a matter of time. And I believed that 24-25 would be when that hit. And we are literally seeing that play out right now. You know, it was really, yeah, spot on, to be honest. Now, obviously, I can't be too early saying that, because from a metrics point of view, I don't know if you guys are aware, but you can only officially state that a country is in a financial recession if they have 2 or more GDP prints at negativity. So if there's an imbalance, a negative imbalance in the GDP for 2 months on the trot, that's officially when you can state a country's in recession. So right now, we can't actually say that, but we are so close, so close. And don't and don't mistake what I'm saying or the tone of my voice right now for me wanting that, because obviously I don't. That would it's going to be. It will be really bad for a lot of people, and it will have impacts to us over here in the UK. If you can imagine it, I mean, we're in such a terrible state of affairs at the moment in the UK. You can't imagine it getting much worse, but trust me, it could. You know, it really, really could. So, it's certainly going to be an interesting period, I think, in end of Q3, Q4. To watch it sort of unfold, and especially 2025 is going to be nuts. 2025, guys, it is going to be nuts. I don't know if you've been keeping up with the US election details too much at the moment. I've got to be honest, considering we don't really have too many ears in the streams these days at the moment, obviously. I feel more confident speaking very openly with you, but I think if Donald Trump gets back into power in the US, I think it's gonna be ridiculous. I think 2025 is just gonna be ridiculous. You know, I really do. I really, really do. It's gonna be nuts. So, from a trader's perspective, I mean, we have got our work out for us. Now, it's not to say times are going to be tough and it's going to be really difficult to trade. You know, at the end of the day, guys, you know, price action is price action. The markets are the markets, and a chart. You know, a chart's a chart at the end of the day. You know, in my, my belief, my firm belief is you carry on doing what you're doing right now. You know, I've seen loads of you just come on so strong. Like something's really clicked, and it's been almost like a room-wide thing. You know, it's just starting to click, and this is why I believe so much in coming on here and doing the repetition and doing the same thing day in and day out, and just going through the markets, working through the liquidity, spotting out, you know, working out the spots of money and looking at where the neutral areas are and stuff. Because by doing that over and over and over and over again, you're thinking, oh, you know, here we go again. But there really is something to be said about it in terms of trading performance long term. You know, at the end of the day, a trader's job is to do the exact same thing day in and day out every day of his life. And so that's exactly what you'd get by working at a professional fund. You know, you go in and you beat the same drum. So I guess, you know, just as a little segue, well done everyone, because, you know, it's really good to see you all coming on. But also 2025, you know, you're really gonna have to, you know, not necessarily step up your game, but you're just gonna have to get ready for it, because it's gonna be, I think it's gonna be a year of real volatility. I mean, really big volatility. 2024, to be honest, has been a bit stationary. We've had incredible gains, don't get me wrong, but you know, I think you know, if we look at the old VIX route, where are you? So we pull up the old VIX here, weekly time frame. Okay, yeah, look at where the VIX has been at 2024. Okay, we did have this surge. That was in August, the state of chain liquidation. Right, we had that ridiculous spike up to here, 65, and you know, that was when we were looking at all the yens selling off in the, you know, all the chain liquidation event that was occurring over the markets. But generally speaking, 2024 has been extremely quiet. Very, very quiet markets up until recently, where we had these couple of surges, and now we're dropping back down below the 20 line. Now, before that, 2023, we saw some pretty decent swings, still sort of trading off. 2022 was really volatile, like up and down, and it just got kind of more extreme before that point in time. But yeah, so I think if we look at the historical pattern of volatility in conjunction with the fact that we're looking at potential deep recession in the US, probably having global impact, we're looking at, I really, personal view, I really hope Trump doesn't end up getting into power, but if he does, it's going to be just like petrol on an already seriously hot fire over there. So the markets are going to be mad. Anyway, right, let's have a look at what's been going on this afternoon then. We'll have a look at the European session quickly. So Euro Stoxx 50 today has been really good, guys. There's no doubt about it. Fantastic price action, really nice breaker structure from the Euro session this morning. It didn't really take place until about 10 or 11 o'clock. I tell a lie, it was 10. Well, no, 10 o'clock. Yeah, so 9:30 we got the breakout. 10 o'clock, 9:45 we got the retest and continuation of the 1 minute time frame. I don't need to go down to the 1 minute chart. But yeah, really nice move nevertheless from the EU 50. The DAX here was also really nice. We got a really nice little short sell off down here. We bottomed out at this low, bounced back, breaker structure, really nice rally up from that point as well. I wasn't actually participating this morning in the European session, so I can't call any credits or fame to taking any of these moves. But nevertheless, it was pretty decent trading price action, I would say, from around 9 o'clock onwards from our European assets this morning. Looking at yesterday's moves, so oil is very close to completion. I don't want to tempt fate though, guys, because frankly we were very close to completion quite soon after taking the trade, and then we ended up being in it for another 3 days. So it's difficult to say whether or not this is going to be the one. But it is looking pretty good at the moment. It's just sitting under that 75.18 TP at 74.93. Hopefully today's going to be the day where we can get that sort of final push and close that down. Yesterday was quite a mixed bag. It was a good in terms of market return. The fund actually yielded about 1.94% based on the current track. So that's not too bad at all. The win-loss ratio, though, recently has been dipping. And obviously the returns are as well. I mean, August last month at this time, I think we were probably on about 20%, maybe 18 to 20%, and this month we're on 11. So look, at the end of the day, I'm not turning my nose up at that. It's performing extremely well, but there has been a huge dip in performance value and win-loss ratio, which over the course of the first 500 trades was averaging at 61.5-ish and is now just struggling to stay above 59. Now, if you take the law of large numbers into consideration, and it is mathematical fact, the more trades that you do over time, the more likely you will reach 50-50. So, it's all good and well saying, oh yeah, my strategy's got a 70% or an 80% win-loss ratio. Well, yeah, okay, fair enough, in what, like 10 trades? But over time you will see that dwindle. We will all see it, sort of really come down to around 50-50, 50 to 55 or something. I would say it will probably balance out at over the course of the next 2,000 trades. Now at the moment I'm averaging out about 400 trades a year. Obviously we've only had 14 months, but that's probably what the average is going to be, about 400 trades a year. And so at this present moment in time, it'll be a year and a half before we reach the 1,000 trade mark. But I'm actually really looking forward to seeing what that looks like as well, obviously having done it all with you in real time, just to see what the metrics look like there as well. Also, just a quick one in terms of the track. I know you guys might utilize it or something very much, but I'm thinking about other data points to include. You know, I don't really know what if there is really worthwhile having other data sets to include. Maybe like total risk reward of the entire portfolio, like the average risk reward, which is what funds use to verify results when they're bringing on new traders. You know, you have to have a 1 to 2.5 to a 1 to 3 risk reward ratio to really be accepted at a good place for a desk and stuff like that. It might be good to include some of those, but I don't know. Hit me up if you've got any ideas. If not, then that's fine. So the trades yesterday, yeah, they were okay. So obviously Aussie CAD here was pretty decent. We had that run into liquidity. We did come up. We did hit the target on that one after the pending order was triggered, so that's quite good. Aussie Yen was a stop out. It did hit target profit, but after breaking structure and triggering the pending, it actually came up to take the loss on it, which is a bit annoying, to be honest. But there we go. Aussie dollar, another loser. Again, another really annoying trade because we came to within a stone's throw of the TP, and then it decided to reverse and come down and hit stop loss in the space of about half an hour. So it's quite frustrating as well. Euro Oz, we hedged the GA against this one to bag a win there. Obviously, we did that together as well. But at the same time, yeah, we took the loss on that. That brings us to the GA, obviously. We took that one yesterday together. Pending order there for a 1 to 2.28 or something like that. And yeah, that one went straight up to TP. Cover the Euro Oz's losses. The GC, this one wasn't actually in. Now, what we were looking at originally is the price action pullback to then break the structure. So what we had is that we actually had a fake out of then this really big move down, then this really big move up, and then this really big move back down again. And it kind of just done that over and over and over again. So don't, ignore this. This wasn't in the market. That was just the trading parameter for the previous trade a couple of days back. But I would still be interested in this pound CAD, and that's the reason why I've left it tagged. So I still want to see basically this happen, and then we can look at that potential trade. So ultimately looking at price action coming up, coming back down to reach, a relatively decent point, and then firing up again, not, down to these lows. I think what you could probably do in in retrospect, is look at a break close retest trade of this level of liquidity and then do that instead. Yeah, so that would be actually the new trade idea. So you'd be looking at the breaker structure around 179.95. Your stop loss is obviously going to be at the 50% point between those two zones, and then you're going to have the TP at 180.33 leading to a 1 to 2.56. So that would be quite decent as well, and something that I would I'd like to sort of see get pulled off. So in essence, this is not a pending order. We're on Thursday. We haven't got too much of the trading week left, but I am going to leave that as a trade idea for the fund. It's going to require, obviously, a little bit more hands-on approach. We want to see the break close and the retest the liquidity here in order to trigger it. Sorry, mate. Yeah, it's because I'm streaming on a on the 4K monitor. It's a massive 4K ultra wide. It's like 36-inch ultra wide. So when I'm sharing, it's gonna, if your monitor isn't 4K, then it will look weird and squished. Is that made it any better, what I just did, or not really? Right, okay. Yeah, it's probably the worst device to watch it on, to be honest with you. But yeah, no, that's cool. I'm going to be, as always, I record these sessions and I'll upload them anyway. So if it's if it's looking a bit skew if on the stream at the moment, then, oh, to be fair, mate, actually thinking about it, I'm streaming it 1440p, so I'm not actually streaming at 4K, so it should be okay, really. I wonder if this will make a difference. Just bear with me a second, because Discord is brilliant, to be honest with you, what you can do with it. So if I do this and then stream at 1080p at 60 frames, let's try that. Does that look better? Yeah, good man, good man. All right, cool. Um, so yeah, as I was saying, pound CAD, really like this trade idea. Yes, it has been flirting with us for a while now, and never really putting out. But the bottom line remains: if we get the break close and the retest liquidity here, we get that break of structure. I think this one's going to go. So I'm still happy to keep that on board. Looking at the NZD USD down here, this one was really good. We had the win in this huge breakout from yesterday's FOMC event. We've come back down. It was incredibly volatile. I mean, today this has even been so good. 7:45, we had this beautiful breakout. We came right to the top. I mean, you couldn't make this up. Look at that, right? I mean, that is so good. And then we reject this area. We get a perfect BOS, which is in here. And we come straight the way back down to here. So, I mean, again, excuse me, I cannot take any kind of credit or fame for having handled this situation like a pro, because the bottom line is, guys, I haven't taken a penny out of it in either of these moves. But you still got to give credit where credit's due, because this is some really nice price action in here, and yeah, it's definitely worth a shout out. So anyway, future trading ideas. I mean, we've got the pound CAD. At this moment in time, I'm a little bit skew-if on the trades, and that's really due to personal health reasons, as you guys and girls know. So I do not feel that I'm in a position to be offering a ton of different market biases. And oh my god, sorry guys, dog's going mental in my ear. Yeah, so I don't feel like I'm necessarily in a position to be dishing out potential trades this afternoon for the rest of the week. But what I will do is just cover that US session. Definitely looking at the price action pullbacks today. It doesn't really require a lot of thought, very much brain power for me to be able to do that. So looking at the NAS 100 at the moment, we're certainly above the liquidity here on the daily chart. So we've got a nice breakout. We've had this area here, almost considered to be a bit of an order block, I'd say, or maybe like a 4-hour time frame. Beautiful breaker structure. We are looking now that we should be rallying really to this point in here, which is basically, you know, like the nice little area between these two points in price action. So we go down the 15-minute time frame here. You can see that this is actually a really decent trading margin. Too much for a 1-minute time frame though. So what we're going to be looking at, we're going to be looking at basically counter trend trades via bearish breaks of structure, with target profit being the big one here or the big one up here, and that's what you're going to be doing. So the counter trend one is going to be there, and the bullish one is going to be here. So entry, target, stop loss. I mean, these are yielding some really decent returns here, folks. And 1 to 2.66, that's really good. And you'd probably, to be honest, you'd probably be able to maximize that even further on a 1-minute chart. And then, of course, you have the long breakout. That's going to be there, and about there. So you've got a bullish 1 to 2.52, and you've got a bearish 1 to 2.66. Approximately. Obviously, these are subject to change when the markets open up and we see which way we're going. But that's the breakdown for the NAS 100. Really nice, really clean, really simple. For the Dow Jones, a relatively similar process. I would say the bearish one's even better. Now, the problem is, of course, you know, it's currently 2 o'clock in the afternoon. We've still got a half an hour to go, and this looks like it's going to break structure now. And that's the problem, because you can't take the trade before the US Open, okay? Pre-market trading, possibly, but not after the FOMC, okay? I'm not up for that. So what we're going to be doing is looking at the trade idea wherever we are by the time the market opens. You're going to be looking for the breaker structure of that low. So just so I can be absolutely super duper clear here, if we, for example, traverse our way down and we're like this and like this, and then we come back up for a little bit or something, you know, wherever that market ends up at the point of the market open. So for example, if we get to 230 and this is our low, then we're waiting for a breakout of that low. At the moment, it looks like we're breaking out of this low to get into the trade anyway, but this is going to be our area, okay, hypothetically speaking. Now, because of the trading no man's land on the US 30 Dow Jones, you do have the capacity to take the trade in between. Okay, so I'd probably just move that zone up actually a little bit, to be honest, just looking at previous price on the 1 minute time frame. But this is a really nice margin of trade. And so you do definitely have the capacity to take a trade idea in here, for example. So you'd be looking at long above. Whoops. You'd be looking at the long above here. Target profit and stop loss. I mean, that's a 1 to 2.5. I mean, 50% points are 1 to 2.7 almost. So that's really, really nice. Of course, if it's a long, then you're looking at the break close, and honestly, folks, probably a retest, to be honest. Yeah, break close and a retest, and then you're looking at the breaker structure. So maybe a price action breakout of this area here. Maybe 42.040. And then a stop loss, and then your target profit, and you'll be looking for a fixed 1 to 2 risk reward ratio trade. Go back in time, daily time frame, we are soaring high on the US 30 Dow Jones, absolutely soaring. So yeah, at the moment we want to be looking at a fixed 1 to 2, 1 to 2.1, something like that. All right, guys. So that's pretty much it from me today. Just to cover off everything, I think. Do you have any questions? Anything that you're unsure about? Awesome. Yeah. Okay, guys. Well, just before I shoot, I do just want to say again, well done, and for those of you who are watching this session later on this afternoon or whatever, a well done to you as well. I have literally seen the progression with you guys, probably more so than I have periodically for a long time. It does seem like something's clicking. And like I said, it seems also to be like a room-wide thing. So I guess I'm doing something right. And I hope that is the case. I hope you guys can kind of sense it in yourselves as well that something's really coming on. And I think most of you can. So just a little well done to you as well for putting in the hours and putting in the effort and ultimately looking ahead to yield those results. But yeah, have a good one, guys. Take care of yourselves out there. Trade safe this afternoon. And I'll catch you then. Cheers.